London, UK witnessed a major international crypto and digital assets summit by Financial Times at Convene 155 Bishopsgate, London. The 2 days, 8 to 9 May 2024, is seen as connecting leaders in crypto with mainstream finance institutions, in collaboration with major companies, which included IPMB. The Crypto and Digital Assets Summit returns for its third edition as Bitcoin reaches record highs not seen since the end of 2021, despite the headwinds generated by a series of scandals and the demise of some of the largest crypto exchanges in recent years. The SEC's approval of several Bitcoin ETFs has injected new money and a renewed sense of optimism into the industry, as many institutions appear bullish on crypto, with banks, assets managers, institutional investors, and regulators exploring the opportunities of crypto and digital assets. New product developments with AI, ETFs, tokenization, and more, as presented here by IPMB.
You look at this space over the last couple of years, and this is like if you think of private markets or make it broader as alts, it's a fairly big space. What kind of at least we found is the easier way to enter this is where there's least disruption and make it accessible, again, least disruption, but more immediate gate and quicker to market.
I think with gold, though, it's interesting. If you cast your mind back 20 years, the vehicle that created some of the same benefits that blockchain and DLT creates, but in a different way, in that market was the advent of the gold ETF, which is 20 years ago that happened. Before that, you could buy a bar or a coin, or you could buy a mining stock, and that was it. And then, of course, the continuous IPO process and the ETFs came of age in the early 2000s. And they totally democratized gold investment. It meant you had a liquid venue, you had multiple APs and brokers were able to trade it, and you could effectively create a financial instrument 100% backed by the physical. But that was 20 years ago. So when we at IPMB looked at gold, we were trying to think, how do you create a next generation way of owning gold that brings unique benefits and efficiency gains using blockchain technology, but most crucially creates a positive carry instrument instead of a negative carry instrument. Because if you think about gold, the critique of gold and some other asset classes, not so much private equity, private markets, but other commodities, is you have the up and down side of the asset class, but you have no yield or no return. And so if you can create a structure whereby through discounts and rewards, you effectively create a positive carry instrument, that's basically what we've done with IPMB with the binary token structure. So it's the only positive carry way of having 100% physically backed gold investment in the world, compared with all the platforms, all the ETFs, even the current token ecosystems are simple bar tokenizations. There are fees and an expense ratio, and you've now got a token backed by a bar, but you have no staking capability, you have no discounts or rewards. So I say that's the crucial difference with what we've done. And I think it takes me back to when you're using this technology, you've got to think about the business case first. It's not technology looking for a problem to solve. If you can, by using the technology, also create an alpha or an arbitrage in the traditional financial sense, as well as creating all the efficiency gains of tokenization, native or fund units. And that is, all the things we're talking about already: interoperability, reduce settlement cycles, reduce fees and costs, direct distribution, cutting out intermediaries. And there are already many examples of that. You've got Benji, you've got WisdomTree Prime, you've got Invenium in the States, very interesting platform. There are other platforms in London and America below the radar right now for private markets that will come out soon. So it's a fascinating area. But in gold, I think that was the key thing: try and create a positive carry asset with all the benefits of the traditional assets that are in the market today. And that's what we think we've done with IPMB.
Yeah, I mean, we've been actively investing across cycles, and actually in sort of more of the bear markets, you do see and understand that there are builders that are more dedicated, and so it's actually perhaps a preference to that time where that it's not sort of a tourist visit, but rather people that are dedicated to building in the space. I mean, in this area, there's a lot of interesting innovations. Obviously, the technology area is is very new, but we're seeing innovations both from the infrastructure perspective, and that's predominantly where a lot of our investments are focused, but also in what the technology allows for opening up in terms of actually net new markets and investment areas. And I mean, this is permissionless peer-to-peer technology. So you have new markets that are evolving. We've been investing, for example, in DAO fund of funds, and this is sort of decentralized organizations where individuals can come together, new potential fund managers who are experts in their areas of innovation. And because of the nature of the technology being open, it's very efficient, low cost, and accessible for anyone to actually spin up new markets that might not have previously been possible because of the barriers to entry to someone who would want to create a market or a fund. And then on the technology side itself, in terms of like the infrastructure and what's been possible.
I think we start from the beginning of how do we set our priorities, and tokenizing a public equity. I think the first question we have to ask ourselves is what's the additional utility that a client is going to get by buying a public equity on chain, and you compare that with what is the infrastructure necessary in order for that same client to access a tokenized public equity. Why would they want to go through that additional complexity on infrastructure?
Chukwemeka Alem, reporting for Ben Television.